All right, hello everyone. This presentation is going to be recorded, and today we're going to go a little more free-form and go into some of our fact-based trading solutions, some of the things that we're posting in the room, posting on Twitter, and these are solutions that you can get access to by subscribing with us. So we're going to go over our fact-based approach and kind of just break down what's happening. We've got some good movement in the market, and we've got teeing up for FOMC tomorrow, so everything's right on schedule. This is our market outlook, and this is what we posted last night. So we're posting the outlook at the start of the crypto session, which is 12 midnight UTC time. So I'm in Chicago, so that's 7 p.m. Central Standard Time. And I'm highlighting that we're focusing on, this is our Bitcoin market outlook. It's based off our weekly structure. We're following a perpetual contract. We're highlighting Tuesday, which is part of our price discovery. So all Tuesdays have their own nuances. And we're highlighting the date. Typically, we provide a little color of insight. So today was better learn how to trade options. And this is basically saying that, these markets are very volatile and they move out of nowhere. And a great way to take advantage of that is to trade with options. And we'll get into that more in other podcast events that we're going to cover. And we're going to get, kind of do more of a deep dive on options trading. And provide you also with fact-based trading solutions to trade options. So we're going to break down this commentary, and then we're going to go to live market. This is weekly structure. So this structure is not going to change for the whole week. And we'll go through the commentary, and then I'm going to pull up a live chart. But this is, where we were trading last night. And basically going over, Bitcoin was stuck in a difficult trade awaiting news events to provide volatility uptick. So, we're sitting in front of waiting for CPI. Market digested all yesterday, and it's continuing to digest, and it's kind of waiting for the news events that are coming out. So the week for crypto starts on Sunday, and it goes, and then we have our opening range is determined by Sunday's action, and so we're identifying the opening range here: opening range high, opening range low, opening range midpoint. And we've also identified the previous week's high, previous week's low, previous week's close, and the previous week's midpoint. So just based on this, we are trading within the previous week's close and previous week's midpoint. So this is a good directional range for us. Is the market going to make a play for the previous week's high and our sentiment bias level, which is at 27,703? Are we going to get a failure here that validates below the opening range low and starts to press into the previous week's low? And so this is what we go over basically in our commentary. We're just, fact focused, doing our best to just interpret those facts and what they mean, adding some of our experience to it, some qualitative nature, but trying to stick with the facts. And so we've got events coming up, could see a volatility uptick. For now the market remains in a defensive posture before 26,200 and is vulnerable to further corrective action down to 25,600. Let me put our, I'm going to switch to our live chart, it's a little clearer. So just to see the difference, we were here, posting here, and now we've got our live chart here. So we made a squeeze to the upside. So we're talking about this 26,200 level as a key point, and we're vulnerable to corrective action down to 25,600, which is here. That could even extend down to 25,350, so it's coming into the previous week's low. So we're basically just kind of focused off the top of the opening range. There's a good pivot. And on the upside, if we do start to see some basing above here, it's positive, but we really need to get a breach of 26,400, which is the previous week's midpoint. So if we can validate, we could see an extension up to here, but based, in real time right now, we could not validate. So we do have FOMC coming out tomorrow, and the market did make a push to the upside, pressed the previous weekly midpoint, is not trading above here, so we're back in that defensive posture. So this market is leaning. We do, just looking at this price action, we do have some higher lows. If the market's bad, it's going to start to build lower highs here. And this will be our validation point if we're going lower. We could easily just trade within this range. It gets back up above the previous week's close. We're right back in neutral. It's just kind of difficult trading. So these are your structure points for the week. And right now what we're going to do is dial in a little tighter. And so this is the weekly structure. And so we're going to take a look at the daily structure. Let me just set this up. Any questions on the weekly outlook? Before we switch? So this outlook is published daily. So basically what we're doing is we're updating this price action within weekly structure, and that's really all we can do is observe price action within the context of this structure, within this framework. So how you get, the practical application of this is, and if you are using Bookmap, and you're seeing real-time events, those real-time events are occurring here. So no matter what your tactic, or strategy is, this is the foundation that you're dealing with. If you are getting a signal and it's a sell signal, well, that's in alignment with the bigger structure. So we're currently below the opening range midpoint, and we're right at the previous week's close. So as the market starts to roll over here and starts trading below 25,800, that's going to be in alignment with the bigger structure and with the potential for a negative shift. And the same goes to if you're getting positive signals here, where is it within the structure? And so you can use a structure as a couple of things. One, signal acceptance. So if you're getting a signal, currently the market is pretty much on the fence, so your risk reward and for either direction is pretty decent here. If you're a buyer here, you don't need to risk much. Basically below 25,800 is your risk. If you're getting a buy signal, sometimes the market does stabilize off these lower metrics to make a move to the upper metrics. So if we aren't able to fail and we stabilize, we could rotate back up to test this if we're having a digestive trade. But with the FOMC, more likely digestive trade. What other facts do we have? Well, the sentiment's above the market, so this is the big sell area for the week. This is where all the selling energy is in Bitcoin. So anytime the market's below sentiment and below the directional, it's a kind of a double negative, and that's targeting the downside pivot area, so 24,265. So you can using this structure as a risk management tool, size management tool. This is where your big size is on sells. So if we're talking in units of 3, this would be a 3-unit sell trade. This would be a 2-unit sell trade off of the directional, anticipating to move down to here. On the buy side, everything's pretty much against sentiment. So if we did, we're looking for more exhaustive reversals to get long. This would have been potentially a break in structure, but the market wasn't able to hold it. We start to base here. It's still a lower size trade because it's corrective. It's against sentiment. So the triggers on the upside are getting above the directional, above the opening range high, and above the previous week's midpoint. Those are really the hurdles for any, return to the positive. And then once we're trading in these areas and we're basing above here, that's when you can get some decent follow through to the upside and make a play for the upside pivot. So it's a structure, risk management structure. Where's your signal occurring within the structure? That gives you the value of your signal. And this is based on the weekly. So if we focus on the daily time frame, and this is the integration that we have with Bookmap, where the daily structure is included in the Cloud Notes column. So there's the Cloud Notes, and basically you set that up with our data file, and it'll plot the structure there. But before we get into that, let's kind of switch to another application. That gets more in depth on the daily structure. And that is our daily playbook. So these fact-based trading solutions, we follow the daily, weekly, monthly, even quarterly and yearly structure, and each one of those structures can kind of be tweaked for, what is your time frame that you trade. And so if you're primarily focused on day trading, then you're going to be focused on primarily on the daily structure and the weekly, because the weekly is going to be the kind of the bigger, the foundation. But all these structures are based on how money moves and how the money managers that move the markets and have all the dough, what their concerns are, and their basically their performance metrics. And so they really don't go down lower than a daily time frame. So that's our lowest time frame. And an active time frame for them is the monthly time frame. So absolutely focusing on alignment of the daily, weekly, and monthly time frames is key for any time frame that you trade, just so you're aware and you're not running into walls. But this is our daily playbook. So this is all these markets are focused on the daily structure. Where, what this is doing is it's providing you with the market state. What's that technical foundation? And we are looking at Bitcoin, and that technical foundation for Bitcoin is neutral digestion. Everyone's traded neutral digestion, sideways trade. If you start to take a step back and think about neutral digestion, markets are always transitioning from one market state to the next. And so a neutral digestion state transitions differently than, let's say, a bear trend state. And so a neutral digestion state is a precursor to a breakout. That's just a fact. And that's something to be aware of when you're trading markets that are in a digestive phase. They're consolidating to potentially have an explosive move. So just as your fate, if you're applying a return to mean or strategy and fading market moves, you definitely need to be aware of the fact that when the market decides to transition out of a neutral state, it can be an explosive move. So if you're in options, if you're selling the belly, you want to make sure you're buying the wings as a hedge. So we set this foundation, this technical market state foundation, and we want to be really clued into what that really means. This is kind of a temperature gauge of the market, right? The market state. So each state is going to have its own attributes. And so for neutral, there's no momentum. It's a spin cycle. There's really no bias to this neutral state in general. If we're just if we're painting a picture here, and we're looking to identify, what's this base coat? Is it, are we painting an ocean scene or a forest scene or an urban scene, or what kind of foundation do we have? And that's really what the state's all about. And then you start to build layers of structure on top of that base. But what's that general base? What's the weather? You're taking a temperature gauge. Volatility is going to typically going to contract, and that we're not really in a trend. So these are all the attributes of a neutral digestion, and that's what these commentaries really just go through. And once you own that, you could even add your own attributes to those environments. But that's what it is. If we're in a bull trend correction, it's going to have different attributes. If we're in a trend mode, it's going to have different attributes, and that's something to be aware of. Different market expectations, different characteristics, but you're setting your foundation, and this is how you can tweak your tactics as well. So you can't come into the market with a tactic and bang your head and just say this tactic's going to work, and then you get frustrated because it doesn't work every day, and it works fantastic some days. Well, the reason it works fantastic some days is because it's in alignment with the state, and that's when. And so, adjusting your tactics and creating tactics that align with a market state is key. So once we identify this market state, then we need to, then we can start to put some structure around it. So we know the market's in a sideways pattern. We know it's a neutral. And what's the key thing about neutral? Well, what's it digesting within? So we're going to start to look at that structure. And that's what this is all about. This is what we call our price map. And this is our market structure. And so market structure is different than price structure, where price structure is identifying the price action, and actually, the way we look at price structure is really identifying, what is the specific high-low of a range or a time frame is the structure we like to look at. But if subjectively, if you're looking at more technical analysis, you're watching price swings, and you're looking for the market to, in a trending situation, you're looking for a market to make, in a bear trend, lower move lows, lower move highs. that's negative, structure, negative price structure. And in neutral, you're looking for the market not to trend. You're not looking for any sustained, lower highs, lower lows, higher highs situation. You're looking for the market to break structure all over the place, and that's what validates a neutral digestive market state. So you're always looking for that validation. Is the market performing to the expectation of the state characteristics? If it's not, maybe we're in transition. If we're in a neutral state and the market starts to trend in a direction and hold structure, that's a tell that, hey, something might be up and something to be aware of. And then also it's a tell when the market does break structure, and it tells you, hey, yeah, we're in neutral. So then you can kind of press those characteristics. You can press those tactics and strategies that align with it. And so one of the first things we do when we're identifying the structure of the market is we want to look at where sentiment is. So every day there's a number, and you can call it an over-under number. We call our sentiment bias our reversal level. So we're basically positive above this price, negative below this price, and that price today is $26,390 for the Binance Bitcoin perpetual contract. But what it also does is it identifies this. It's not only the over-under number, but it's identifying where the top is of this neutral digestion. And so it really comes to zero in, and since the market sentiment bias is above the market, it's giving this neutral digestion a negative tone. So it's definitely, there's a sideways expectation, but the sell side is there's a lean to the sell side in this digestive trade. And it also is the energy point where if we do get a breakout to the upside, it's more likely to have more energy to the upside than to the downside, just because it'd be a more powerful shift in sentiment and in state. The other part of the structure is what we call our critical range. It's the upside pivot and the downside pivot. So turns out today, sentiment is at the upside pivot, which is not always the case, but today it is. And that creates a special, what we call regime. And that's what we're identifying here, this risk regime. And so this is just telling us, hey, we're at risk below this price point, and we're at risk down to this area. So this 25,430 today is our stabilization point. So that's kind of the low end. If we're going to have this, if this sideways state is going to continue, then the market's more likely going to stabilize off this 25,430. And so that's what this commentary is really just going through. It's just talking about, hey, we know the market's in a neutral digestive state, and here's the structure of it. Here's where sentiment is. Here's how sentiment's going to change that. So we know the neutral state's digestive, but since the R level is equal to the upside pivot, it gives them, a negative tone below this price point. The ether is a little different, where its sentiment is above the upside pivot. So what this is doing is it's expanding this digestive range. So the critical range isn't the focus for this neutral digestion in ether. It's actually even higher. So this 1813 in ether is at what we call our upside target 1. So it expands that range. Let's see if we've got anything a little different here. This market is at what we call our critical range extreme. So basically, where sentiment is kind of skews the state. It gives it just a little bit of a different tone. And so it's all, we're just optimizing our view. We're just really dialing into what the foundation of the market is. What's that, what tactics, a tactic that's going to work well at the upside pivot, is going to be, we're going to need to tweak that out when sentiment's higher, because we don't want to get too aggressive at the upside pivot here. We want to get, because we know the energy is here. It's and it's simple as that. Where are the key structure points of this state where the market's going to make decisions? And so we define that base layer. We define the sentiment to that layer and the price structure that defines it. And so if we're in this state and we have this sentiment bias with this structure, what are the optimal strategies? What is the best thing to do? That's optimal. Well, the best thing to do in a neutral digestive state with sentiment above the market is to fade momentum into the upper lid. So we're going to want to fade momentum into here. This is our optimal strategy themes. The other optimal theme is the market presses it to the downside because sentiment's above the market. We wait for the market to kind of flush out, maybe create what we call a reversal where it goes below this price point and then pops back up above it, gives us a reversal signal telling us that it's a kind of a false breakout, and the market's more likely to bounce back into a digestive trade. So those are kind of the optimal themes are always in alignment with the state characteristics. So, and the state characteristics for neutral digestions are going nowhere. And so, these are two strategies to look for. They're not the only opportunities for the session, but they are the best. And this is where, if these are occurring, this is where you want to bet big. These are your big bets. I mean, this is opportunity participating in this momentum, transitioning from one extreme to the next. So there's definitely opportunities throughout the day, and this is a decent sized move. And so, if you're more swing trading, looking to identify specific areas, or you're just going to trade momentum, you can also look at these as themes. So if the more, are we going to get a play for this level? Are we going to get a play for this level? Maybe we do, maybe we don't. But if we do get a play for this level, and maybe it happened overnight, and now the market's moving away from it, you can look at this as a theme. It's not so much, yes, whenever you come into the market, you need to say, hey, the market's in this theme. It's moving within this theme. It's moving within the sell UP fade theme. And how do I jump on that theme? Is that theme still in control or not? Is price action making lower move lows, lower move highs after it attained that target? And aligning with that theme. And as long as that theme's in control, then you can feel more confident that those characteristics from the state are going to remain true. And if we break structure, well, that's what we call our hedge themes. So now things are different. Things are maybe in transition. This, if we are breaking structure and we are moving outside this critical range or above the sentiment bias, or we fail from the critical range and we can't get back above the directional, we might be in a negative transition. So we have a couple hedge strategy themes, and this is, the market's potentially in transition. And so one of our hedge strategy themes is a buy UP breakout. So we get above, we're getting above the upside pivot here. We get a breakout above here. That could spark a breakout of this neutral digestion and signal a transition. We don't know what the market's transitioning into. It might be just expanding the critical range. It could just be expanding the digestive trade. We're not sure, but we don't want to fade it. We're going we want to go with that momentum. This is exactly what these commentators are going over. They're just explaining, and it's literally a playbook. You have a book. It's in markets in a neutral digestive state. It's got sentiment at the UP. What are the optimal hedge strategy themes? What does it mean when the market is generating a UP by breakout? And it's just giving you guidance to what's the state, because it is what it is, and it doesn't change for any market, any asset class. It's all the same. You're in this state with this structure. This is what you do. This is what it means. And if we get a buy UP breakout, it may be the start of a potential positive state transition. Or it could be an expansion of this digestive parameters. Well, it seems we've had some technical issues on my end that we haven't been able to update our. You guys, we've been blind here for a little bit. Is that correct? We've been sharing in a trade room, but we haven't been sharing on Discord. Just want to see when did the screen disconnect? All right, I'm going to start from the beginning here. We've had, and I'm going to go through the playbook back again, and we'll go over the market outlook on a different time. But we're gonna get into the playbook right now, and we're going to talk about this application, and we're going to go into live market and just see how things are playing out. But just give you an idea of what we have going on here. So I'm going to just start from the beginning. So we offer fact-based trading solutions, and basically what that is we're not providing conjecture or subjectivity. We're looking to focus on what are the true facts. Yesterday's high, that crypto, yesterday's high can be debatable based on where you're trading, but on if you're trading on Binance, you're trading on Coinbase, it's going to publish a high, and that's a fact. And so those are the kinds of truths that we look for, instead of saying, okay, there's a trend line here or a point of control there or whatever. These things can be subjectively interpreted, and we want to avoid that. And so what we do is all of our algorithms are focused on identifying the truth and what the facts are. And so one of our applications that helps us do that is what we call our playbook. And the playbook, this is our market grid. It's color-coded for the different types of states. What's a market state? This is our kind of our base layer that we're looking at. When you're coming into the market, you need to take a temperature. Is it hot and muggy out? Is it freezing cold? Do you need a jacket? Are you going to bring a raincoat? Are you wearing a hat? Do you have your sunglasses? Do you not need them? How are you preparing for the trade session? And that's really the state. What's the context? And being aware of the context. So you're painting a picture. Is it a night scene? Is it in underwater scene? Are we in the mountains? What color is going to be that base color that you want to bring out in that painting? This is what the market analytics do, is they're painting that picture for you, and they're going to start out with a base coat, and that base coat is the state. So red is our negative bear trend color. This is our bear trend correction. So the market is in a negative trend but had a positive shift. We're going to take a look at Bitcoin today, and it's brown. It's our neutral color. So market is in a neutral digestion. And so neutral digestion is, most traders look at states as, trending or non-trending. It's and maybe even push it a little further, saying they're at an extreme. So they really just, I'm either in neutral, I'm trending higher, trending lower. So we've just taken that to a different level and just saying, okay, we're not just looking at trending or non-trending. We're looking at what type of trend is it? What type of non-trend is it? In a non-trend state, we've got a couple things going on here on the crypto side. for non-trend, we've got neutral digestion. It's classic. That's a picture out of a textbook of sideways trade. That is a general market state. We also have markets that are in a neutral negative shift, where the market's been in neutral or trending, and it shifts back into more of a neutral negative position. A market that's in a bear trend correction is a non-trend state. So you've got a market that was trending negative, and now it's starting to go sideways. It still has somewhat of a negative lean, but you have this corrective action. So that's another non-trend state. So if you're tweaking out what tactics you want to use, are we using trend following or non-trend following? Simple as that. But then you start to say, okay, well, if I'm in straight neutral position, I can fade either direction. But if I'm in a market that's in a bear trend correction, I'm going to want to lean on the sell signals versus the buy signals, because that market could just turn into a bear trend. And I may even leverage up those negative signals at positive extremes in a bear trend correction, because I might be catching the high point of a corrective move. And so understanding that state foundation is key. And then each market state is going to have its own characteristics. And we've all lived all these states. Instead of having the neutral uptrend, downtrend, we've identified 26 signature market states, and we've really classified the attributes of each one. And so getting in sync with these attributes of each state is the first thing that you do. And so let's focus on, go back to Bitcoin. And so we're talking about neutral digestion. What are the attributes and characteristics of a neutral digestion? Well, there's no momentum. There's not really a bias. Volatility is going to contract, and there's no real trend. And the expectation is the market's going to look like this. This is what we expect the market to look like. And if it's not looking like this, then maybe the market's in transition, and that's a fact. And so that's something to consider. One thing about any market state is it has its own characteristics when it performs to expectation of the state. So neutral digestion performing the expectation of the state is going to go sideways. And then it also has a characteristic of when it transitions, because markets are always transitioning from one state to the next. And your job as a trader is to identify, is the market performing to expectation or of the state or not? Or is it in transition? And the days that it performs the expectation of the state, those are the easier days. That's when things make sense. That's when it's easier to get in sync. When things aren't performing to the expectation of the state and we're in transition, things are unclear. We're not sure where it's going next. And so when you are in a neutral digestive state, one of the key features of that, when it transitions, it can be the precursor to a breakout. And so what we're doing with the playbook is just literally, this is a book. It's, and if you're in this neutral market state, this is what it is. And just providing a solid definition to make sure that you're on the right page of what the characteristics are and being aware of them. And once we have this base layer, now we need to we want to put some structure around it. Okay, well, we know we're in neutral digestion, but where is that upper lid and where's that lower base? And that's where our price map comes into play. And it looks to, this critical range is defining this structure. And so the next thing we look at is on structure is two things. We're looking at our sentiment bias and our what the framework is of that market state. So where is the market going to make decisions to transition? Is it going to hold structure and perform to the expectation of the state, or is it going to break structure and transition? And these are the key price points that all the money is looking at. Everyone's looking. That's when the big money is going to come in and make decisions, when markets transition, or are they going to persist? So in what the first thing that we do to that next base layer that we're on our painting is what we call our sentiment bias, and that's our over/under number. That's our number that we look at to say, okay, above this price we're positive, below this price we're negative. And where is that sentiment bias within the neutral digestion? Well, today in Bitcoin it comes in at 26,390. And it also turns out that that's our upside pivot. So you've got two things that are in alignment. You've got our critical range, which is our UP upside pivot, and our DP downside pivot. That in this framework for the neutral digestion, it's defining the upper boundary and the lower boundary, what we call our critical range. And then the sentiment bias is giving us a skew, and it's telling us, hey, since sentiment is at the upside pivot, it gives the market a negative tone. And so that's another thing to consider. So this is something to consider on your tactics. This is telling you, hey, yeah, we're neutral, but we have a negative bias. So it can be a size management tool. Hey, if I get a sell signal, and I'm below 26,390, then I'm gonna trade that bigger than if I get a buy signal. So, kind of simple as that. And especially then, and the value of your signals are going to be determinant where you are within this structure. And so the sentiment bias can float around, but the structure does not. So Ether today is in neutral digestion as well, but its sentiment's a little different. And so it's a little different skew. They're both in neutral digestion. They both have the same baseline characteristics, but their structure's different. So that just changes things slightly. So instead of just being a hard point for Ether, there's actually a band. And so actually this whole area from 1813 to 1779 in Ether is kind of a resistance band. But the real selling energy in Ether is going to be at 1813. So basically the sentiment creates a skew of the state. And the structure of the state, the price structure of the state, is defined by the price map. And the base of that price map is the critical range. I'm not going to get into the different levels, but they're just, basically the directional is the midpoint, and then we have some other minor levels. And as you go through when you come on and start working with the playbook, you can go through the different tutorials that go into the detail. But the main focus of the structure is the critical range. And that's what we're going over here. This section is really going over how does sentiment skew the critical range. And since we're in, this is a playbook, it's an if-then statement. If you're in this state with this structure, then this is what you do. And it's the same for any market, any asset class. If you're in a neutral digestive technical state, and the sentiment is above the market at the upside pivot, then these are your optimal strategies. And also your transition or hedge strategies. So optimally, and this is all logic, what do you do when the market is in a neutral state with sentiment above the market? So negative sentiment bias. Well, best thing to do is going to be fade momentum into the upper extreme. That's just what it is. And you're going to come to those decisions as well as the more you understand, hey, this is the state, this is the structure, what's my optimal theme? Well, the optimal theme is I'm going to sell fade the momentum into 36,390, because if the market's going to persist as a neutral digestive state, it's going to top out around here. And the other, and that's the best thing to do. And the next best thing to do would be what we call a buy DP reversal, where, hey, the market's going to probe lower and it's going to break out to the downside. It won't be able to hold that breakout. It'll start trading back above 25,430, and it'll produce a reversal, more likely to get a rally back into the middle or even back up to the upside pivot. So that's what we call a reversal strategy. So these are kind of the optimal strategies for a neutral digestive state, basically with the expectation the market's going nowhere. So these are the best strategies. They're not the only strategies. These are just the ones you'd bet big on. If we're getting a reversal strategy, absolutely participating in momentum to transitions to the opposite side of the critical range, that's an opportunity. These are themes. So if a strategy theme comes into play early in the session, and it's holding structure, holding price structure, markets, what structure? If the market is starts to trend, lower lows, lower highs, or higher highs, higher lows, where you start to see some momentum, and this is starting to follow through. That's a theme, and so you want to align your tactics with that theme. Understanding the market's performance expectation. Now, if the market breaks structure, that's a different story. Now, all of a sudden, this isn't true, and this is real important. Your job as a trader is to identify what theme are we in. Are we in an optimal strategy theme, or are we in a hedge strategy theme? And if we're not in an optimal theme and the market's breaking structure, then this isn't true, and we shouldn't, hope that our fade strategy is going to work because the market's breaking structure. And when the market's breaking structure, then we want to execute a hedge strategy. And in this one, we're going to buy a breakout above the R level. The market's going to, if it's holding positive structure, it could be a powerful move because this is a shift in sentiment. Expectation would be that this breakout would be more powerful than a breakout to the downside, just because where sentiment is, and this is where the energy of the market is. And so that's one of our hedge strategies. The other hedge strategy is what we call our sell DIR critical range breakout strategy, where the market breaks out below the critical range and it can't get above the directional. So the directional becomes a real pivotal point, and it's kind of like that: is the market going to continue to transition negative, or are we going to get bounce back above there and to confirm that we're going nowhere? And so that's what we call a hedge strategy thing, when the market is transitioning from one state to the next. And these are definitely outright strategies as well as strategies, option strategies. So, when the market is making a play for the upside pivot, what's the optimal theme to do is sell calls against the upside pivot. If we're making a play and we're getting that buy DP reversal, we're selling puts at the downside pivot. And so you can use this structure for your strikes. And this gets into a little more insight into options analysis of what your expectations are and how you want to play them. So let's pull up today's action in Bitcoin. Where's my daily chart here? So before we get into, so with the playbook, you're setting your stage. We have a couple different integrations. This integration is with a charting platform called Sierra Charts. Just getting So I always like to take a look at in addition to the price structure, again, it's fact-based trading solutions. I know that this is the previous day's high, previous day's low, previous day's midpoint, and previous day's close. So it gives me a sense of where is the price structure in relationship to the price action within the price structure, within the market structure. And so here, I know we had this breakout above the previous day high, but it was going right into sentiment. And so that's without market structure, without the definition of what the state is. Here's the start of the session. The market is trading around the midpoint, which is a good momentum level. So the market's making, immediately jumps higher, can't hold below it, which would be a transition down to test the previous day's low. We're stabilizing here within, we've got some good energy here because we've got the close and the midpoint kind of in alignment with the expectation of, hey, we're going to get a play for the, yesterday's high. We take it out, that's positive, and the market gives us that positive push. But, if we take a look and we have sentiment in there, it kind of changes that story. You know, instead of getting super positive here, we know that this rally is going to be challenged. And then when we take a look at, you know, the market structure of the state, we know that the market is in a neutral digestion. We know sentiment is at the upside pivot. And we know that that is one of our optimal strategies to fade, with the expectation the market's at least going to come back down to the directional. And then now we've got the market trading below the directional and threatening further losses. Markets are real symmetrical, and looking at this market taking out this previous day's high by, looks like a half APMD. I'm going to put my minor levels in here. So let's say a half APMD. So taking out the low by half APMD, it's going to come back. It's going to come down into this area here. So I like looking at, kind of symmetry like that of a failure. Maybe we get a symmetrical failure here in this structure too. So as I mentioned before, so I did add some what we call our minor critical range. So here's the critical range with the upside pivot and downside pivot. Then we have, the validation points within this range. So these levels help manage a position. So as the market comes into our sell UP fade opportunity, we have these metrics. So we call this an alert distance and a variance. And so this is kind of the signal acceptance area. So if you're running a strategy, you want to keep your signal acceptance within these boundaries and avoid kind of trading in the middle. That way you can really define your risk. And then in this situation, the market trades back down below the critical range positive level at 26,146. And it also is trading back under the previous day's high, and then it can't get back above this metric barrier. So this is a sign that the market's trending lower. This is a negative structure. You can look at this as one big ladder. And so, this price distance between major levels is what we call an average price map distance. So this is the expectation. So when you're getting into an opportunity here, your risk reward is based off of minimally this target. In a market that's in a neutral digestive state, this is definitely going to be a good momentum level. Is this just an event squeeze, and the market starts to build positive structure and starts to trade back up here? We could, that would be a tell that, hey, maybe this thing's going to transition through and we're going to break, move to the upside. The fact that we rejected and we couldn't trade back above this metric is a negative signal here. This is what we would call an add-on trade. The market performs to expectation, and then it pulls back to and when you're trading here, absolutely this is a target. So if you're trading multiple units, you're definitely this is you're getting out of one of your exits here, you're getting out of your other exit here, because the expectation this market's going nowhere. So it's either going to, we're looking for the market to settle around the directional, potentially make a play for the downside pivot. Right now it's telling you it's weak. And this is on a daily basis. Again, we're looking at daily structure. So we can take a step back later and look at the weekly structure. But now we're in this theme, and that's what's really important, that the market is performed to expectation in a sell UP fade theme. It paid out one APMD. We're looking for it to pay out two APMDs, average price map distance. So it paid out one. We're looking for it to pay out two. So now, even on a daily basis, you've got the playbook, the state is neutral digestion, the structure is based on sentiment, which is above the market, which was negative. The strategies we're performing to the state. Optimal strategy theme is in play. The sell UP fades in play. And now we're taking a look at, what's happening on the microstructure. So we know the market came down here and it tested the upper metric boundary of the CR minus. We're still off the previous day's low. What's really evident right now is that 25,902 is our risk. So if we're managing this trade, and whenever you come in to the session, you need to assume that you have that position on, so that you get your mind right of really what's occurring. Because if you were here, this was your trade, and what's happening now is how are you protecting that trade. This trade is definitely wrong above here, and now the fact that the market failed here, if this momentum is going to stay really negative, we could take a swing here and move it up, but basically we're looking at this price structure here and this metric, that this momentum should continue. So if we get a squeeze up to this area, that should be the high point if we're going to continue lower. We don't need to, and this price point is going to be a big point. So now we can take a look at the order book and see what's happening here. This is a combined book. Let me So here we have both combined books. We've got the Coinbase, Kraken, Bitstamp, Bitfinex book combined, and we have the Binance, Bybit, and OKX. So this is going to be Tether, and this is going to be Fiat. So we're keying off the directional, we're keying off the upper metric here. This is things I like to look at here is, again, just it's a fact focus. So we have our VWAP, and the VWAP coming in at the top of the directional metric boundary. This is what I'm looking at as my risk. If that sell UP fade is going to follow through and we're going to get a play for the downside pivot, that's the expectation. It's interesting here where you've got some liquidity building up here at the top of that range with the VWAP. We can also see that the market likes this CR minus level. We've got some resting paper going on here, and we've got some big resting paper that's been here for a while down by the downside pivot. It's not really showing up on Coinbase, and this on the Fiat, but it doesn't look like this book is really extending that much at all. But that gives you insight to, if we do get a push down into this area and you're trading at the CR minus, let me pull the so this kind of situation here, if you're short the market, and we're getting a play here, in the current microstructure, we've got some liquidity here. So, absolutely, this can be a situation where you're taking out these lows, you're pushing down into this area here, 25,666, and we could get, a positive reaction. So this is, you can use this as a tool. So if you're short, and the market's playing in here, what you need to understand before it even gets here, what are you going to do? Because you're vulnerable for this market to bounce right back up to here. and it can happen really fast. And you have some liquidity support here that you might get something like that. Doesn't mean it's not going to bounce and come back down. But where are you at? What's your, are you holding this thing for a longer period of time? Do you have a dinner to go to? What's up with your life? Do you want to deal with that, or do you want to just take this money and say, hey, I'm going to take another half APMD out of this, and I'm going to give up that fact because I need to do something, or I'm going to get more aggressive on my position management. I might exit some here, and if the market fails here, I might press it because now, hey, maybe we are going to get a flush. And so what we can take a look at on the what ifs is we can go to a higher time frame. And that was the weekly outlook that I was mentioning earlier. And so here's our higher time frame. Give you a sense of what this looks like. So, then we can throw the daily on here so you can kind of see where things are playing out. And it's interesting that the previous week's low is actually down here. And we had real good alignment with the sentiment bias for the day and the previous week's midpoint. And so we had a market that, basically rotated up, test the midpoint, and we know that if we're here, this market's vulnerable to come rotate down and potentially test this previous week's low. 2517 is going to be the critical range extreme. So this is good alignment where if the market breaks out of the critical range, this is the validation point to the downside. This is the validation point to the upside. We call that a critical range positive, critical range negative extreme. And so that this would be if the market's going to produce a head fake, this is where the head fake will occur. And so that's something to be aware of. So we're at sentiment. Market's in the sell UP fade theme. Is it going to follow through? If it does, we know that the other optimal theme is the buy DP reversal, so we're expecting the market to trade below here, and that comes into these levels here. So let me just, that's the weekly minor level. So the expectation would be that if the market's going to continue to perform to expectation and we do get a flush, we could get an exhaustive signal within here. So you get the macro structure, you dial into the microstructure. If you're only dealing with the microstructure and you don't have the macro structure, you're blind. You need this is, these are facts, so it's a statistical baseline. So when you know this, when you have this structure, one, you know your size management, you know where your risk is at, you know where you're wrong, you know where you're right, you can anticipate your exits. And that's what it's all about in trading, anticipating opportunity. All right, so I know we went a little longer today. I had a mess up with the camera streaming. That's my bad. We'll be here again next week. We're going to go over the long-term market outlook. Again, our method is to incorporate a statistical outside view to help you slow down that decision-making process to minimize your biases. So we all have these cognitive biases. We get anchored on a specific price point because we did so much work on it. We have that, we read something and it just says, hey, I'm a seller. That's my story. I'm sticking to it. And you need to really go through and dial in with what the facts are. Do the facts support that? And if they don't, you've got to question it. At the very minimum, you got to dial your size back. And if they support it, then go big, especially if they're at a good structure point. If they're not, then you have to have good size management, but that's the key. Anticipate opportunity with proper size management. That's money. If you haven't read it, I recommend this Thinking Fast and Slow by Daniel Kahneman. This quote, the outside view offers more accurate predictions than the inside view. What this is basically saying is that the statistical probabilities are more accurate predictions than your gut feel. Now, gut feel matters, and gut feel can help you leverage up opportunities and make you excel beyond what a machine can do. But you need to have that statistical baseline to do it, because that gives you your clear head. That gives you the truth, so you can get into the flow. And that's when you trade the best. When you're in flow and you're in a state of flow, that's because your sentiment is in alignment with market sentiment. And when they're in conflict, that's when there's problems. So if you'd like to play around with our tools, you can come to dharmacapital.trade, sign up for a trial. You can also follow me on Twitter, where I'm posting updates, typically a little more longer term view. But if you are into day trading, and if you're a Bookmap subscriber, we have the integration, and you can start playing around with it and just see how that works for you. Feel free to email me directly with any questions. Enjoy your day. Cheers.